Paul here from My Perfect Failure, helping you turn your failures into successes and your setbacks into opportunities. Could the next wave of success stories come from those that were once overlooked? Joining me today is Senofer Mendoza, the visionary co-founder of Mendoza Ventures, a firm that's not just investing in startups, but investing in the future by empowering underrepresented entrepreneurs and disruptive technologies. We discussed the difference between running a startup and running a fund, why resilience and leadership are tested in moments of pressure, and a powerful role AI and critical thinking now play in building smarter businesses. Senofer's approach to innovation, diversity, and transparency really resonated with me. It's a roadmap for what venture capital should look like. So if you want to learn how smart investing can transform lives and industries, then stick around.
Who knows what Jay-Z, J.K. Rowling, Bill Gates and Oprah Winfrey all have in common? Okay, I will tell you then. They have all overcome failure in one shape or form to go on to gain success in their respective careers. Welcome to My Perfect Failure. Join us as we delve into the world of our perfect failures. We will interview, explore, and discuss how our perfect failures can lead us to success. Join us and tune in.
Welcome everybody to another episode of My Perfect Failure. Today I'm super excited because I have another amazing guest for you. So joining us today is the co-founder and general partner of Mendoza Ventures, a Boston-based pre-seed fintech, AI and cybersecurity venture capital firm. After having a career in enterprise sales and hospitality and design, she began Mendoza Ventures to address the growing funding gap in the pre-seed funding stage or underrepresented founders. Mendoza Ventures was launched in 2016 and invests in the cybersecurity, AI, and fintech space. She is a published author, innovator, and thought leader in the technology, startup, and the space with a passion for equity and diversity. So a very warm welcome to My Perfect Failure, Senofer Mendoza. How are you?
Thank you so much, Paul. I'm great. How are you?
I'm excited. I'm excited to have a conversation with you. So for everybody that follows My Perfect Failure, possibly you might recognize the Mendoza name or the Mendoza Ventures, because I had the pleasure of having an amazing conversation with your husband, Adrian. So I'm excited to have a conversation. I'm almost like completing the circle by having a conversation with both the co-founders. Excited for this today.
You led with the best.
Sorry?
You led with the best.
Well, I've got to, and maybe in the future I can have. So this is maybe the goal. This is the goal, to have this amazing conversation today, and then maybe have you both on a conversation at some point in the future. Maybe we can arrange
We'd
that.
love that.
That would be amazing. And I just wanted to ask about your name. So Senofer, I love the name. A name that hopefully I've pronounced it correctly, because I wasn't sure if I pronounced it correctly, but it's not a name that I'm familiar with even. You're the first Senofer I've ever had the pleasure of meeting or conversating with. Where does the name originate from?
I grew up on Cape Cod, Massachusetts, but my parents were hippies. So I got an Egyptian name, and Senofer means eternal beauty in ancient Egyptian. And so actually Tutankhamun's gardener was also named Senofer, or his landscape architect was also named Senofer. And my mom combined the Hatshepsut's daughter Nefre and her caretaker Sentiment had a love affair. And in Egyptian mythology, if you think about someone, they live for that moment in the afterlife, which is why they graffitied their names all over everything, so that they were like guaranteed. It was like eternal life insurance. And so she put the two lovers together in my name, so that when my name is said, they wake up with their lover and they don't have to be alone.
Love that. Now, what I'm thinking about as you was explaining, and now that the amount you have to be impressed with your parents for putting much research and meaning into a name. Some people just go online and they think, okay, that one sounds good. They would go with that, or they get a book, or they hear. So I love the meaning, but the work they put into coming up with such a lovely name. And do you know any other people with the name Senofer?
I don't, but the structure is more common in the Middle East. So in business, I now have a Egyptian first name, a Scottish American middle name, and a Mexican American last name. So I confuse everyone. I think half of the people are expecting like a Middle Eastern dude to
Yeah,
walk in and they get
yeah.
me.
That's interesting. I remember years ago that I've had when I'd be doing sales calls and stuff, and this is probably a lot more before we were using LinkedIn and stuff. So you'd have these sales calls and stuff with people, and then eventually you would arrange the meeting and you would meet them in person. And I would always have this vision of what this person would look like, and I would have these firm, I don't know why, but they were quite strong ideas about what this person would look like and stuff. So when I would walk in to meet them, they'd be different to what my vision was. And I would be, hopefully, sometimes I didn't start with them because sometimes I'd be a bit surprised. But hopefully I disguised that well. I'm not sure I did, but hopefully I did. So I know a little bit about your wonderful company because I've had the pleasure of interviewing and having a lovely discussion with your husband. But what I was keen to understand is how Mendoza Venture started, because obviously your background I know was in design, and eventually you guys tiptoed into Mendoza Ventures. What was the genesis of you guys thinking we need to start a venture capital fund and we're going to do it? What happened?
Well, for us, we had a startup. So we had exposure to venture capital and how venture capital works through raising a fund in Boston between 2008 and 2014. And so we exited our startup. And when you have an exit, you tend to get a lot of adults in the ecosystem coming to you and saying, do it again.
Okay.
And so we were being offered leadership roles in startups. We were being offered board seats in portfolio companies. We were being offered like entrepreneur in residence jobs in VCs, things like that. And when we took a step back, our experience of venture capital, which was very much everyone's experience of venture capital, is that you get a check and then you're held accountable at quarterly board meetings. And there's a lot of intellect and expertise in the capital markets. And so for us, we said, why don't we just create some transparency to the back end of that check and see if we can accelerate a startup easier? Anyone who's built a company knows how hard it is. And you end up cobbling together advice from lawyers and other founders and advisors. Sometimes that advice is very good and sometimes it isn't. But when you have advice coming from people who have invested in your company, everybody's rowing in the same direction. Everybody's in the same boat. Hopefully, if communication has gone well, driven towards the same outcome. And so we just set out to create that. So our first check was $10,000 into a Boston startup in the pre-seed. They were pre-revenue. We grew that into a proof of concept fund of about $150,000. Our first formal fund we called Fund II because we had this proof of concept. And that was $10 million that we oversubscribed to $14 million. And then now Fund 3 is $100 million that we're closing later this year. And it's anchored by 3 banks. So we have institutionalized as we've gone. But that first check was very much in the angel scale of, we think we can help this startup. We think we have some expertise. And let's see what we can do.
Okay. What's the mindset like going from, I guess, having your own startup to actually creating your own fund? What's that journey like, maybe from a practical perspective and maybe also from a mental perspective? Because I can imagine there's a lot you're having to learn. I guess there's a curve that you're having to navigate. What was that like for you guys?
They're completely different types of businesses. So I was the COO for our startups, largely because I was working in hotels and my husband had a startup in our living room. And I think a lot of your audience will resonate with this. I no longer wanted the startup in our living room.
Yeah, imagine.
So I said, well, I'm going to have to lean in here if this thing's going to go. And so it's so many startups are family businesses. And I think we don't talk about that enough in our community, that it's not just the VCs that are supporting the founder. It's also the wives and the kids and the parents and the entire community that helps this entrepreneurship. So for us, it was learning how to do just a completely different kind of OpEx. Like startups are really about trimming down as far as you can to drive revenue to scale. Like that's what you use venture capital for. Venture capital as a business is more like running a law firm where it's you're scaling the business, but you're not scaling your own business in the same way that you're scaling a startup. You should not blitz scale a VC firm, I believe. Some have. And I think the proof in the market is why you shouldn't do that. And especially in our model, we're not investing in 50 or 100 startups out of each fund. We're doing 12 to 15 concentrated checks. So those are your startups for the next few years while you're working with them. And so it's a much more concentrated, time-intensive business model. And it's a much more regulated business model. You register a fund with the Securities and Exchange Commission here in the US. I know it's very similar where you are. And all of that reporting and diligence has been amazing for us to learn. But in a startup, you can throw a lot of spaghetti at the wall before you get a phone call from a regulator, as Uber proved, but not in a VC firm.
Okay. And I recall when I spoke with Adrian, and also I gleaned this from some of the interviews I've listened that you've done. So interesting. I think sometimes when people think of VC firms, they just think of the money. They just think of, just give me the money. They just think it's all resolves around the cash that you inject into businesses. But I know from listening to you guys that actually that's just a small fraction of what you guys do as a VC fund. For people that maybe think it's just about the money, maybe you can expand on what else goes into actually supporting the maybe 12 or so businesses that you will invest in or you have invested in.
Yeah. Your cap table is your treasure. And so you really have to choose the partners that you want on that cap table carefully, because you're going to be in this business with them statistically for 10 to 17 years before you exit. And so that is so much of what we do, is making sure that founders are ready for the next stream of capital that they want to go for, and making sure that the business is ready. We do a lot of institutionalization in our portfolio companies because we're coming in around the A round, either just before or during. And so we're setting up quarterly board meetings. We're making sure all the governance is in place that you need to be able to scale. All of that kind of stuff. I mean, we have founders call all the time just saying, this happened. Have you come across this before? Everything. I think coaching is just a huge part of it. We have the beauty of being outside the business. We're in the trenches on other things, but we're not in the trenches on closing your biggest customer this year or your employee that wants to quit because you haven't been able to pay them enough for 2 years. And so we can come in with a fresh eye and help coach through those things. Or the beauty of us is that in our bench, we have 145 LPs that all have deep industry expertise. So if you break your code and you call me and I'm fixing it, a lot has gone wrong in the world. Like, I should not ever touch code, but I have. No VC probably should ever touch code.
If I email you and you'll say, Paul, I'm doing some code work, I realize, okay, got a problem
the earth is something's in retrograde. But I have a bench of, off the top of my head, 5 amazing founders that are deep AI coding technologists that can solve that problem. And so we tend to be more that connector piece. We always say if we're putting our hands on the wheel, something's gone wrong with the car. So it's more about empowering the founders and the startups to do their absolute best than it is about, handing them the solution to the next thing, because it's all different. It's all a boutique. There's sort of 2 ways to VC. You're either doing the, wide portfolio, Y Combinator approach, where your support looks like almost like an MBA program, where you're creating a series of content that you're providing for your founders as support. Whereas for us, it's the opposite. It's a boutique bespoke approach, where they have an issue that they're dealing with this week that feels super on fire, because it is. and we're coming to them with a solution to that or a connection to a solution to that. And I also think it's fair that VC is not very transparent. And so I think it's fair that so many founders do think it's just about the money because that's all that they talk about in public.
Yeah.
You know? And it's when you're a founder and you can see what the next $500,000 would do for your product or your team, that's the most urgent thing in the moment. And so I can see how that happens, but it is not just about the money. It's money and resources and education and network all coming together. And then the money is like a happy byproduct of all those things working.
Yeah. Yeah, it's far more of a complete, when you listen to people like yourself and Adrian and others, you get the understanding from the uninitiated that it's more of a lovely complete package as opposed to, because money, I imagine if it's not used wisely, with the right education, with the right mentorship, with the right support, can go quite quickly. And having those, so one of the reasons I was really keen to speak to you today, and we will get into this, is unique to what you guys do as a venture firm, in that you support the underrepresented in this market, the people that don't really have access to maybe the right role models, maybe the right cash. And I know that you guys do a lot of work in that space. So you guys are very unique. And I'm sure I read somewhere, that might have evolved, but 90% of your fund is catered for the underrepresented. So that's quite unique. Maybe you might want to expand on that for people who aren't familiar with that.
So in the United States, only, and this is true internationally, I think too, but I have to brush up on my international statistics. Only 2%, or I think the last current stat is 1.7% of venture capital goes to women or people of color at all. And so for us, we don't really see it as catering to a specific demographic. That's not in our thesis. Our thesis is that if we invest in disruptive technology that has a unique competitive edge, we have the ability to outperform other models in the areas of cybersecurity, dual use, and artificial intelligence. I live in the United States. The United States is 20% almost Latino now and 51% female. Mm-hmm. And so if you are only deploying to one demographic, you're missing a lot of American talent. So this fund only deploys to the US. We have deployed internationally before, and we will again, but this one deploys to the US. And so if you just look at that as a statistic, if you're really finding the most talented founders, I don't think you would land on 98% of one demographic, no matter what that demographic is. And so McKinsey in 2020 released a study that diverse teams outperform, which has been followed by a ton of validating research. And so our thesis is that if you want to outperform, you need to invest in diverse teams. And if you're investing in a homogenous team, you're missing an opportunity. And I think the stereotype that we can all relate with in tech is two engineers go to school together and they're from the same neighborhood and they start a company and they forget to hire anyone that's different from them. Every VC has been pitched startups like this. You guys have all met them. And they're missing half of the business because they're so focused on their own unique skill set that they're not rounding out the business enough to be able to scale it. That's a problem that we see over and over again. It's a problem I've seen on every homogenous team I've ever met, no matter what demographic that homogeny was coming from. If you take a group of Bostonian white women, we're all going to have the same bias just because of our lived experience. And so we diversify the team usually through making sure that the board is well-rounded. So a great example is Canvas GFX is a company that I sit on the board of, and they do manufacturing documentation. So there's a lot of miscommunication on the manufacturing floor. Tech and digital instructions have the ability to solve for a lot of that. Our board was not diverse, and I was co-investing with another investor, and I said, I want to make sure that our female CEO has representation across the board. And so we brought in our independent as a woman who happens to have a PhD from Harvard and MIT.
Wow.
I think she did an MBA and then PhD. I forget which order she did, but she's an MIT engineer. So it's not really I mean, I'm sure you've seen in the news that DE&I has had a lot of talk in the US lately. It's not really about DE&I. It's that if you're putting together the most capable team, you end up with a diverse set of people.
Yeah.
And I think a great example of that is the Marines or the SEALs. Like, the American military is one of the most diverse workforces on the planet and one of the most elite. And that's true of your country too.
Yeah. Yeah, totally. Yeah, there's been a lot of that in news of late. I read something just before this call, and it was around something that you've kind of leaned into, but it was around diversity in terms of investing in the underrepresented. And I think it was a McKinsey stat that they were saying that if you invest in diverse, and they've seen some of their reports that your actual return can be 30% higher because of some of the sort of the niche areas that they're actually focusing on. So, which I found really interesting, because I would have thought, if you're an investor, that it's all, and this could be naive, but I would have thought return matters. It's important. So if you know that there's an opportunity that if you invest in a certain demographic, the return can yield higher, up to 30%. I don't know how accurate that is. That's pretty impressive stuff if you can get a return up to that level.
We see this all over the US.
Really?
So the only Latino GDP in the US is the fifth largest in the world. It's just after California. And so in the world, so just one demographic of one, and I know a lot of Latino statistics because I married one, and so that's what I'm leaning on. But I know that there are other statistics for the Black community and the Asian community and others, but that's just one subset. And historically, because of a lack of trust in banking institutions, Latinos are underbanked just because they don't have a history of a great relationship with financial institutions. And so just solving for a simple problem like that is like a $50 billion opportunity. It's insane. And so what I think we're starting to discuss as a country is that venture capital originally was created as a playground for the rich to get ridiculous returns. Like, this was not created as a representative inclusionary structure for the American people. This was created so that the Rockefellers' grandkids get in on tech and crush it. Like, this was not created for the entire country. That's something that anyone, I'd say, millennial and younger, is bringing to venture capital and expecting of it. And so now you're seeing these big friction points of who should get this money and what does it go to? And you're also seeing very public conversations about where do those civil rights protections fall? Because traditionally it hasn't been part of venture capital. You don't get 98% of a pot of money going to one demographic with civil rights protections in place anymore. And so our country is trying to have those conversations, which I think is great. I think the important thing to also remember in that is that venture capital is one tiny, tiny, tiny silo of the entire private equity industry. So private equity is the entire private markets, and venture capital is the riskiest portion of one of the riskiest asset classes. And it is the Wild West from a regulatory standpoint. And so when you look at the percentage of money that everyone's arguing about over venture capital right now, it's really small compared to the broader capital markets.
And do you see, okay, and do they all mirror each other as well? So does the VC market mirror what's going on in the private equity space as well? So there's work to be done on both sides, on all sides.
Yes, 1,000%.
I guess what you guys are doing at Mendoza Ventures, you're almost like pioneers, because you've come in, particularly on the East Coast, or maybe this across the States. I don't know whether there's anybody on the West Coast that's doing similar to what you're doing, but you're almost pioneers in that you actually are tackling a fundamental problem where you've got this wonderful talent base, full base of entrepreneurs that have got fantastic ideas, but they feel blocked. And also, I was reading something around that there was a guy who was saying that he's an underrepresented group, and he was saying that he doesn't really have when he started, there were no role models for him maybe to look up to. And so when he became an entrepreneur, he felt he didn't really fit in with the founders didn't really see role models in the founders that he were in that space at the same time. But also he felt slightly different from his family because none of his family were in that VC or in that entrepreneurial space. So it's great what you're doing because you are actually tapping into that and really giving people, I guess, there's role models, plus you're giving people the knowledge that actually you can succeed in this space.
I would say to your audience, whether or not someone did it before you, you just have to do it anyway.
Yeah.
It's not, it's too important. So for me, I have an 11-year-old Latina daughter. She's not going to get funded in Boston right now. Statistically, that's not going to happen. And I'm not okay leaving literally a city founded by immigrants to that statistic. Like it's one of those things that I'm not comfortable not taking action on. And that if it falls into, and I think what happens so much, especially if you're told that you can't too much in your life, you hand the keys to the car to the experts. Like I never saw myself as an investor, but I had a 401k since I was 21. I just didn't see it as something that I was actively participating in. But that 401k is investing in the markets. And so if you have any retirement financial product, if you give to your university that you graduated from, all of that money is being invested for you. So you should ask what it's going to. So a great example is in the US, a lot of the public funds don't exclude firearms, tobacco, and alcohol unless you specifically choose an ESG focused fund because of the returns that those can generate. So you have to tell your financial advisor, I don't want to invest in firearms if you don't want to make money off of manufacturing guns, which for younger people in the US is a really big deal. They do not necessarily, you could argue even for the Winchesters, it was a really big deal. And so you have to specify that. So I always look at it as I would not buy a cake from a bakery if I didn't know what was in the cake. But you're handing over sometimes up to a quarter, a third of your income to a financial advisor and not asking them where it's going. So there is an education gap, but there's so many resources out there now that were not there when I was younger to learn about all of these things. Like TikTok is awesome. I won't comment on it regulatorily, but the content is awesome. And now all that's being mirrored on Instagram and Threads and Blue Sky. So there's content out there to at least get you started in thinking about where your money is going. I always think of it as like, are you going to go to Starbucks? Are you going to go to the coffee shop? And our office is on Newbury Street in Boston, and there's a coffee shop down the street that's owned by a mom who drives in from New Hampshire every day to run her coffee shop. Like, I'm buying my coffee from that woman for the rest of my life. But you also have to do that with your retirement accounts, with your donations and other things if you want to start impacting how the system works.
I'm glad you made that point because I'm thinking about me. I don't look into that detail as much as I should do. And that's something that I will look to do. And I love the analogy of the coffee shop example, because I know that when I'm buying a pizza or something, I remember when I used to live in West London, and there'd be a sort of I won't name the chain, but there was a big pizza chain. And just in case I invite somebody from that pizza chain on the podcast, but I never used to go to that pizza chain, but there used to be this lovely Italian guy that opened up. He was totally independent, made amazing pizzas. And I know that, so when I treat myself, I'd always go and buy my pizzas from him. I'd get to know him, and I know that he was constantly up against it. And I hate when you go, you're in high streets and you see the independent stores closing down. So I would always go to the independent stores. I'd rather spend my money there than in these in the big multinationals who've got the money. So I was reading. Actually, I think this is one of your interviews. But I think your first investment, one of your first investments, I think you 10x'd it in 6 months or something.
Yeah,
phenomenal.
That was a company called Good Dog Labs, and it was 2 Latino founders out of South Texas, and they had a really cool So identity access management is anytime you log into anything, that's identity access management. And they solved for that. And they moved to Boston because their largest customer was TJX, which is like TJ Maxx companies is a big like dress shop and house goods shop. Like, those stores where everything's like discounted and all the stuff is there. It's one of those.
Yeah.
And so they moved to Boston to be with that customer. And we found them and just helped them through getting ready to raise money. And in that process, we had acquisition offers. So the lawyers make you say past performance is not indicative of future returns. Like, I don't know if I can 10x another company in 5 months, but we're certainly going to try. And that was a benefit of us looking in places that other VCs were not looking and taking meetings that other VCs don't take.
Which is phenomenal, by the way. That's beyond phenomenal. In 6 months to achieve.
It's crazy. It's not going to. I want to put it out there. It could happen again, but it's one of those. So statistically, private equity is the generator of generational wealth in the U.S. So if you think about where money comes from, it's coming from either starting a business, selling a business, or being in the capital stack of investing and selling businesses. Yeah. And so I always say, like, the Rockefellers found oil, but then their great grandkids found, or whoever is doing all that for them. And so with that exit, that founder was able to buy his mom a house and set his family up, get himself set up. It was him and his brother were the two founders, and they created generational wealth for their family. They got married a couple of years ago. We spoke at their wedding, which was so sweet. And they rented out an art museum in San Antonio, Texas to get married in and filled it with mariachis, which was just absolutely beautiful. But that would not have happened in a full-time job, working away for even a bank or something like that.
It must make you and Adrian and your team stories like that. Obviously, that is pretty exceptional. So by anybody's standards. But because it's almost instant. But whether it takes 6 months or 6 years or 10 years, whatever it is, when you're able to impact not just their lives, generational lives, that must make all the calls at weekends, calls at 9 in the evening. It must make all worthwhile when you're able to impact people's lives in such a way.
I mean, it definitely does, because I don't know where else founders would go. There needs to be 100 of us. There needs to be the solution for the economy is a capital stack that looks like everyone here. And then those opportunities will happen all the time.
Yeah. Since you guys, I know you guys started in 2016. Has anything changed since then? Are you seeing positive green shoots that maybe weren't there when you guys first started?
It's so funny that you're like, has anything changed since then? I don't know if we had a little pandemic.
Yeah.
We have this president that just started. Couple of things.
We're getting all of these grenades that don't really help.
But the positive shoots I see are that the demand for transparency among young people is really heartening, because I grew up in a generation that was, you go to college and you do what you're supposed to do, and entrepreneurship was not encouraged. So I graduated grad school in 2010, and I actually looked at business schools, and I didn't go because I was like, these are not my people. They were all trying to work at Lehman Brothers, which is a big bank that went bust in the US.
Yeah,
or they were trying to work at JP Morgan, and that culture is just never going to be a fit for me. I'm too creative. And I'm too entrepreneurial. And so I didn't do business school because that culture was not there. But now that culture is encouraged and curriculumized in a way that I think critical thinking skills are acknowledged, and emotional maturity is acknowledged in a way that's been curriculumized, that previous generations could have really benefited from. And so that I'm really excited about. I also think we have the availability of information is just cool. Like, there's a great TikToker or Instagrammer called her first 100K. And it was a young woman that just saved up her first $100,000. And now she's a millionaire, but she's just shared this journey of, okay, I'm going to pay down my debt first. And this is what I'm going to do. And breaking up that very traditional financial advice with the transparency of actual relatable people doing it and having stuff come up. Like, I'm in the sandwich generation. I wasn't planning on burying my mother a couple of years ago, but we had to do it. And so how this transparency around these financial moments in our lives, I think is incredible and is giving the younger generation just a huge leg up, because if you're not getting it at the kitchen table, you have to get it somewhere. And the availability of that is just so much broader than it was when we were younger.
Yeah. I was just thinking with the advent of not just AI, but in particular AI, and just in particular of the way that the workplace is evolving, it's changing. Some of the traditional jobs that have been here for, 30, 40, 50, 60 years, there are more and more reports how the workplace is going to change, and maybe some of those traditional jobs that we could rely upon over the years may not be there, but quite quickly, maybe in 18 months, 2 years, 3 years. I don't know what a realistic timeline is. So with that in mind, do you think that those creative skills that we all have, we all can develop, nurture, and improve on, and being more entrepreneurial? Do you think, particularly for the underrepresented, do you think we really should be thinking a lot more, and maybe placing more focus on maybe using the skills that we have, and maybe having confidence in some of the ideas that we have and seeing how we can develop them?
One of the biggest arguments against the printing press was that people were going to forget how to write.
Mm.
like it was literally, and the same argument happened in translating the Bible out of Latin. It was, oh my God, if we make this accessible, what are the monks going to do? Like, what their whole job is to transcribe the Bible and explain it to people. like we're going to put all the monks out of work. I think it's this argument. The same thing happened with the radio. The same thing happened with TV. And I'm old enough that I remember when we got our first computer, and my grandmother was like pretty much in bed, Charlie and the Chocolate Factory style by that time. And she was hanging out in her room, and we put the computer in her room so that we'd play with her and stuff. And my mom printed something, and her jaw dropped. Like, she was just floored that this computer just spit out an entire thing. And she just started crying. And we looked at her, we're like, what's going on? And she just said, do you know how much stupid time I wasted in the War Department typing stuff? Like, that was not maximizing her potential as a person. Like, the way that, and we're very much seeing both the potential of AI and the actual implementations of it, and how far those actual implementations are lagging behind the potential right now. So I see it as an amazing tool to increase the capacity and to lower our ability to just miss stuff. Like, every MRI scan is not read perfectly right now. And the ability to do that better and process it is game changing for people's lives. So we have been less willing to pull the brakes. Like, I'll give you, and so I would say also where it is right now is that, especially with the LLMs, I feel like it's like early Facebook, where we're all on it, but we're all just like wasting a lot of time kind of like figuring out if this is something cool, or if this is, Facebook now is like, if you're a parent, it's just for local organization and these very specific things. But when it started, we were all just posting what we were eating for lunch and all this stupid stuff to like see what the algorithm did. And so I feel like that's where we are. And my daughter and I were chatting about Taylor Swift and what she wanted to be when she grew up. And I said, oh, well, you can be the Latina Taylor Swift. And she laughed it off. Didn't say no, but laughed it off. So I opened up ChatGPT and I said, show me 3 examples of a Latina Taylor Swift. And it just generated these images of this like Dora the Explorer-esque girl like this. But it was so, you could see her face shift of, oh, I could do that.
Okay.
And so to your point earlier about founders not seeing themselves, like just the generative aspect of it, like, okay, great, here's a picture of yourself doing it, go do it anyway. It can dismiss that part of the brain.
I love that creative aspect where you can use those tools to be creative and get excited about things. Whereas, so I remember, I'm probably explaining my age a little bit here as well, but programs like, or films like Total Recall and those films that were so futuristic, and maybe Back to the Future, a lot of these things that were on the TV that we just thought were just so unrealistic that we would never see. And it's just like now they're just here, and we kind of take for granted, or I guess we do take for granted. So it is exciting what the potential is for us out there. But I guess it's not being, because I know that some people are, I know that definitely there's some people who are my age group who may not, their career paths are totally different. So they are not really into the AI thing. Maybe they think that or maybe there's a little bit of fear there that maybe it's going to remove jobs, or it's going to disable some of the skills that we think that skills like writing and maybe the creative aspects. But I actually think it worked. We can work beautifully with it.
Yeah. And I also think most of us aren't really. So when Sears came out with their prefab houses, the architects rioted in the US because they were like, you can't just have a house in a box that you set up. In the 1930s, Sears was like, building a house is too expensive. We're going to bring the cost down. We're going to make prefab houses and we're going to send them out. And the architects were like, this is the end of architecture.
Yeah.
Like, you just put a house in a box. We're done. That's not the case. It just, not every house was worthy of an architect that we were building in the 1930s anyway. Not every architect was worthy of a monument. Like, I see, like, a great example is anyone who's neurodiverse has a really hard time writing an essay, usually.
Yeah.
And so if you can just outline it with AI and then you're off to the races, like you've gotten over the blank canvas anxiety, I don't think taking away an accommodation is a way to accelerate human development. And I think, I've heard a lot of arguments about resilience and things like that, but I don't see I'll use a great example is that my son's in a school and they're all really empowered kids. So they ask a lot of questions. They're over listened to. And so
I love those kids when they're asking those inquisitive questions. You'll think, where did that come from?
Yeah, exactly. And their teacher didn't want to tell them not to ask questions because, like, that's why we're in school. Yeah. And it's one of those schools. But she was going nuts because she couldn't get through a lesson because she kept getting sidetracked with all these topics. So she opened up a laptop on the side of the classroom, opened up ChatGPT, and told the class, if you have a question that you cannot hold in your body, go ask the laptop, and then we'll look at it after class. That is a great accommodation because what is that kid going to get from wondering what the temperature is outside and sitting there struggling through a lesson trying to remember their question? Like, they can just get up and go ask it. So I think, and in terms of replacing jobs and things like that, I don't know anyone that feels underworked in their current role. And if they did, I'd wonder why that job was there anyway. It's I don't know anyone that wouldn't give up 20% of their stupid repeatable tasks to AI to just do the good part.
Yeah, no, I agree. And I think that I think it was Reid Hoffman, I think it was him that said something that the way that he views AI is that, kind of like to your point, that it should remove some of the tasks that he doesn't like, and it should aid his work. So it's not there to take away; it's there to aid and complement. So, and I guess what excites me about AI is efficiencies, where we can use AI to be efficient. I think about in England, maybe things like our NHS. I don't want it to take jobs, but what I do want it to do, if I ring up and I need to speak to somebody, if I can't get through because there's not enough people, maybe some level of AI can be ingested into the system whereby the simple things that information could be given to me could be taken away from maybe the humans that are working in the system that are just completely overrun with other things. So things like that excite me. There'd be probably lots and lots of different examples, but I think about efficiencies that I, from a selfish perspective, can benefit from.
One of the use cases that's hitting the ground here really hard is call centers, because to your point, you call a community bank if you bank with a local bank.
Yeah.
If your pizza guy is a bank, it's an experience right now. And so if you call with a question, you get someone who's literally flipping through the website to try and find the thing that you're asking about. Like, oh, if I'm 2 days late on my mortgage, am I going to be charged a fee or whatever it is? And so we're using AI chats, not direct to the customer, because I think we tried that and it was awful, but
Yeah.
but to the call center to say, okay, let's get you that answer faster so that you don't get frustrated as a customer. So they have an AI there helping them. And then you have the human in the loop to say, oh no, this is the right answer for this. This is what I was looking for. Because otherwise they're looking through pages of legal documents and things like that on the back end. And it's life-changing because it lets these smaller financial institutions create the level of service that, you know, the huge ones do on a dime. And so they're able to be more competitive in the market, and it's supporting to market diversification. And also the customers are less frustrated, which is good. We're seeing a lot of it there. We're seeing a lot of it in diagnostics because I'm in Boston. So there's a lot of med tech that happens here, and just double checking diagnostics to say, are we reading all of our x-rays right? Are we reading all of our scans right? Because there's also, you know, differences in those health experiences in any health organization. So yeah, that's it. The use case that we're all trying to implement now is just making our lives easier. Yeah.
Well, I just think that's, to make our lives easier and more efficient, we get more done, we get some of our time back. So like you, as an example, you and Adrian, so busy, having free moments. I guess everybody can relate to this because everybody's busier today. So where we can use our time efficiently, we can get some time back. That to me is pretty much a win-win. And I would imagine for organizations or companies, they're going to get less complaints and have to spend less time fielding those complaints. So it does excite me the way that it's going, and I'm sure by the end of the year there'll be more updates and advances. What I wanted to ask you guys, so when you first started Mendoza Ventures in 2016, when you started to engage with companies that you were looking to invest in, what was that process like? Were you going to find them, or were they coming to find you? How did you engage those partners sort of in those early days?
We were founders, so we knew founders. First of all, we wanted to prove out the concept that we could be a value add with our own money, largely first, before we took on anyone else's money. And so if I were to do this all again, if I were to start today, it should have been a $10 million fund. I think we're being too intentional and foundery about it. We were doing the engineer thing of like, let's make sure it's perfect and then we'll put it out there.
I would want to do that just to mitigate risk.
Yeah, no, just raise a $10 million fund.
Wow.
It's risky anyway, like the risk doesn't really go away. And also we found that what we immediately wanted was the ability to advocate for that founder with a bigger check. Because what happens if you go in with a little seed stage check and then you sit back, which is a strategy and people do it to make money doing it, is that then the VCs come in and do their VC thing. So our early checks were still going into the traditional system of venture capital and having that experience. So we moved up the capital stack and now we're anchoring A rounds to make sure that advocacy is there on an institutional level. And so for us, it was, if I saw something cool, I'd message the founder. There was a woman that pitched on Shark Tank and I just LinkedIn'd her and said, hey, I thought this was interesting. Didn't love the questions that they had, would love to chat with you. And she worked at Tory Burch for a long time. So we became friends. And so we laughed that we had about 250 cups of coffee before we wrote a check. and it was in, we'd go to coffee shops and in Boston, meet founders and see what they were doing. And we'd track them over time to see how they did. Yeah. And so it took us about 6 months to find our first one where we felt like we were hammering out a process and we were identifying clearly what was sitting wrong with us, because it's like pattern recognition. And you'll meet someone who's every idea sounds cool when you're talking to a founder, but then something's not sitting right with you about the presentation or the trajectory of the company. And you really have to dig into the financials and all those things to figure out where that feeling's coming from. And so when we did that, we got ready to write our first check. So it was a process. It was not an efficient process, I don't think, but we learned so much that it was like getting a grad degree.
Yeah, I can imagine. Well, I can't imagine actually, but I would imagine that going through that process, writing your first check and doing that due diligence. I'm sure I listened somewhere recently that you guys, there's about a 3 to 6 month process where you meet your potential partners you're going to invest in, just so that you've done that due diligence. Do you kind of like have I guess a checklist that they sort of slot into before you think actually there's a good opportunity here for them and us?
So we have a checklist, and we also we come up with things that we're watching for that company over time. So our process now is we have an investment committee, and we have a fellows program that we've run since 2018. And so we have MBA students consistently in the office, and they help a partner create a one sheet on a company. And then we vote on the one sheet if we want to do a memo or not. And so as an example, like if an AI company comes forward and they have 35 employees, but they're live in market. If you're in the AI field, you should be able to scale less than 35 employees. Like if you're really focused on revenue, that's like heavy, unless you're engineering some really crazy IP that is. So that's a question that we may have about that company. And so we would watch that over the next 3 months and say, okay, like what are they doing? Are they actually contributing to the core product, or are we engineering heavy? Are we sales heavy? What are we doing here? And so that's for that one. But on top of that, we have like check the company registration, run background checks on the founders, do reference checks, all that kind of stuff also happens.
When you decide that you're going to invest, are you looking for somebody who's doing something that's, I don't know, that's heavy on the innovation, or maybe there's an amazing purpose behind it, or there's amazing story, or is it a combination of a multitude of things? That obviously the financials have to be on the money, but are there a combination of factors that combine together, make it an investable opportunity?
So the three things that have to be completely in place for it to be investable are product, market, and team. Like all three of those things have to be near perfect. Because if you think about it, it's only a fifth of all startups or so get the next round of funding. It's really short, but that's at every stage of funding. So if you raise a C round, then of all the people that raise a seed round, a fifth of them are going to raise an A round. And now it's less, in the past year or two, it's been less. And so you really have to believe that this product, market, and team can hold together through all that, and that they have a solution that the market is ready for. So any of those three things can take out a startup. So on top of that, I would say we're probably mission biased just because of who we are. Like there's a strong bias towards mission. If you're using AI to rip apart the Amazon to find copper, we're probably not going to want to do that.
They're probably doing that, sadly. There's probably somewhere right now doing that, sadly.
Just because of who we are, but there are VC firms that would. And they'll probably make a lot of money doing it. So that's an arguable point. And then we cross-check over time. So we say, what questions do we have at the one sheet? And then let's track that for 3 to 6 months. New questions come up, old questions come up. We're one of our startups now. One of the CEOs is at the seed stage, and he's amazing, but he's very engineering forward. And so as the company grows, he should be a CTO because he's a great leader of engineers, and that's what he'll grow into. And so are they ready for that? Have they talked about that? That would be like the team side. And then the product has to have defensible IP. There's a lot of Frankenstein AI companies coming out now where it's something over OpenAI or it's something different. And so it tends to need to be kind of a different use case. Like one of our AI companies is using AI to It's solving the garbage in, garbage out problem of AI. So it's using AI to get all your data ready for AI, which is one of the things holding back the industry right now. So it's not like
That's really interesting.
yeah, it's cool. And we're working with healthcare data and things like that because most people don't even know what they have right now. And so that's like we like really geeky solutions, I think, and that's like a really geeky solution.
Yeah.
Like it's not, oh look, I made Taylor Swift on my AI.
Yeah.
It's
So
like I
I,
made sure that Taylor Swift looks like Taylor Swift on my AI.
I was just going to send you my Taylor Swift proposal after this. I won't do that. I'll put that on hold. So the due diligence that you guys do is insane. So there's a lot that goes on before you get to the point where you're investing. So that's something that maybe people don't realize. You might expect it, but having spoken to you and listened to you, what goes into that due diligence process is pretty exhaustive.
It is, and it's frustrating for founders. So we take an approach of help or get out of the way.
Yeah.
So we from day one of a founder meeting, we're connecting them to other portfolio companies so that they can do their diligence too, because you should always be diligencing your potential partners.
Okay.
And so we want them to diligence us back so that everyone knows what they're getting. And so we are connecting them to other portfolio founders. We're connecting them to potential customers. We're connecting them to LPs because some of our LPs help on the diligence side when they have a specific skill set.
Is that
And
does that normally go on? Does it?
that is not normal at all. Usually LPs write a check and then they go to Cabo.
Okay.
And then or ours are very hard workers, but their expertise helps everybody, just like our expertise helps everybody. And so we try to gear it around advancing the startup through that due diligence process. And if at any point it's a no, we let the startup know. But we want to work with them.
Yeah.
We want to see them succeed and fail before we put millions of dollars at risk, making sure that they can do those things and still move a company forward.
Yeah. I I interviewed a guy, amazing guy, who I think his name's Ali Halabi, and he started a company called Boat Lines, which is like a it's in Turkey, but it's almost like a work transportation, like be like a transit for staff to get to work more efficiently. Because I didn't realize that Istanbul was a very densely populated city, so people can't get anywhere. So if you're in a car, you could be in that car for a long time. So he experienced that. But the reason I'm mentioning him is because when he was looking to get investment, I think it took him, he had one business that failed, and then he went back to work in corporate, decided again, I hate this, I need to get out. And he went through the process again, and it took him, I think, 38 meetings to get investment. Eventually got investment, and he ended up selling the company, I think, maybe 2 years ago. The reason I'm mentioning him is because what he did after every constructive piece of feedback, when he was told no, he would ask for feedback to say, okay, thanks for your time, but what can I do better? Then everybody would give him feedback. I don't think he asked for all, I think he asked toward the end of it. So maybe the last 9 or so, he asked for feedback. And I think, so every pitch after that, he put that feedback into the pitch and then eventually got that bit of investment he needed. So the reason I mention all that is so when you get sort of founders that maybe you won't move forward with, do they ask for advice so they can maybe utilize that and improve maybe for opportunities in the future for them?
Some do. We've kind of stopped giving it because we used to give it. And what we find is that founders are asking for feedback, not as a genuine ask for feedback, but to change your mind. And at that point, your mind's already been made up.
Yeah.
And also we have a really diverse team. And what we found is that when the women on our team gave feedback, it was received very differently. And I'm not in this business to get yelled at. So, so we found that we had already decided at that point that it was not a relationship that we were going to immediately move forward with. And that breathing room is kind of necessary. And also that feedback should be coming from people who are going to write them the check. Feedback that they internalize into their business, because there's advice everywhere in VC land. Everyone's willing to give a founder advice, but the advice coming from your board or from people with knowledge of your business, or for people whose outcomes are tied, are very different. And so I'd say, like, unless it's a problem with the pitch, and then I'll say something. I told a founder last week, I said, I love this idea. Your deck is so ugly, I cannot share it. Like,
yeah.
Which
is really helpful.
Yeah, like, they had to hear it. I'm sorry they had to hear it from me, because I had not had enough coffee and I could have delivered it better. But that moment felt coachable. And so I shared that information. But as a policy, when we say no, it's a no. And then they should get feedback from people that they still have a chance with.
Yeah.
And I'd also say to that founder, the advisory circle in the beginning was too small. He should have, like, in front of those 38 meetings, get the meetings of, I'm bringing this to market. Can I get your input before I walk into your office and pitch you in front of your boss?
Yeah, because he did say actually that some of the pitches he did, they were kind of like there wasn't a match between him and those founders, just in terms of maybe their expertise, or maybe what part of that ecosystem in terms of the types of checks that they were pitching. They were just like there wasn't a good fit. So he said that it was a brutal process, in that if you're a founder and you're really serious about what you want to do and you do go through that process, clearly it's going to be a difficult process, but he's come out the other end and he loves it now.
It's the hardest thing I have seen any of us do in our lives, because as a founder, that money is the problem. You've worked out everything that you can. That money is the thing that's going to fix it. And you're pitching your idea to, like, we were founders too, so I'm putting myself in this bucket.
Yeah.
You're pitching your idea to idiots that don't understand what you're trying to build. And you're literally, like, trying to cover rent next month. Like, it's such a perfect storm of nerves, where I've seen you have to sail through it gracefully anyway, because you're showing your ability as a leader at every step in the process. And I think the CEO of Disney wrote a book saying that, your best day as a CEO is always your worst day as well. And there was an incident in the US where a child died at Disney. And that was the same day that he was opening up Disney Shanghai. So he had to talk to a mother and then go to a ribbon cutting. And I have found consistently that is the experience of leadership. Something is always going wrong while something is going right. And it's your job to edit that, be present in the moment, and navigate it well. And as painful as the fundraising process is, it's such a good example of that broader experience as the company grows. Because the problems get bigger.
Yeah. With that in mind, and you kind of mentioned, you alluded to this at the outset, and I'm conscious of your time, but if I may, the emotional coaching and mentoring, how much is that playing the role that you and Adrian and your team have? Is it all, or is there some involvement with having to navigate founders through the emotional ups and downs, or do you expect them really to be able to develop that independently?
So your VC should not be doing that for you. And because at some point, so our perfect board is like a founder, a VC, and an independent, because at some point you're not going to agree on something. And the power dynamic between a founder and a VC is so different anyway, because of the concept of money comes into play and all these different things. So we actually proactively try not to do that. Instead, we send them to amazing coaches, therapists, whatever, in the market that are phenomenal. And we have also done this. Like, we don't do that for each other. I had a coach all through COVID because I was a mom in COVID with a business. So I think it's really what founders should do is just really know what they're bad at and work on that, and also know what you're really good at and continue to excel that at the same time. And, for us, we have recommended that someone get a coach and things like that, but that's where we lean out, because your capital stack should not be involved in your emotional health at all.
Okay. That makes sense. And just to, we're getting toward the end now, so I just want to lean a little bit more into the community that you support through through investment. And maybe people that are watching this or listening to this, that maybe they are that community, and maybe they're in the throes of, or maybe they're having challenges in terms of, maybe it could be they just don't know, because I know that we talk about networks and maybe they don't feel they have the right network. Are there little things that people can do to just move along the curve so they get closer to where they need to be, if they're feeling that maybe they're not seeing examples of people from their groups doing things that they want to do?
So in terms of network especially, you can either find it or you can hire it. So
Okay.
I mean, there's capital raising is always hard, and those networks are not transparent. And so, like, you have to find where the money's coming from and get to know those people really well if you want venture capital or PE to be an option for you. And so I would say start out with that. And then the other mistake that I see a lot of founders do is that they're so concerned with the like. So we mentor a ton of underrepresented MBAs, and hands down, you walk into a networking event and the Black MBA will find the Black professional and the Latina MBA will find the Latina professional.
Yeah.
But in a system where 98% of the capital is going to white men, who do you think is writing the checks? Like, so I would almost push away from that a little and say you're going to have to just break your network if you want to get into this industry, and that's been true. And so we really push our fellows. You need to go meet 3 people that your belly is telling you not to talk to, because if you depend on that internal narrative of feeling emotionally supported in a situation to extract capital, like, no one's gonna love you for succeeding in this. Like, it's not that emotionally safe space. It is a space that is designed to deploy and extract more money. That's all it's designed to do. And so you really have to get the bolstering from home, and and when you go into these spaces, meet people you would never imagine yourself meeting. And I would also say work the problem backwards, because for a lot of underrepresented people, like, athletes are now writing checks. And so someone who looks like you is doing something exceptional somewhere. You just have to find them.
I'm sure I saw that Michael Johnson, I'm a big fan of Michael Johnson, the track athlete, and I'm sure he set up his own, I'm not sure if it's a VC, it might be a VC fund, but something, I think it's something as you would expect in the athletic space. That's quite interesting. And just around the talent that exists within the underrepresented space, does that excite you?
Oh, 1,000%. It is. I think no matter what happens with DE&I and all that stuff, like, the US has had open doors for hundreds of years, and it has created a system where we can have entrepreneurship in the first place. Like, entrepreneurship is now being debated as a national right. And that is so different from anywhere else in the world. Like, when I think about how Charles Dickens wrote about how awful debt was in London, like, that wouldn't happen there. It's that you should be able to go and get $10 million and set it on fire starting a business. Like, that is such a different take on the foundation of an economy. And I am so excited to be here for this. Like, the fact that we're looking towards national infrastructure for the first time in a while in the past 5 years to enable AI. It's just cool. Like, it's just, it's nice to see your country want to build something. And that's what I believe in, and I just think it's always been a talented group. It's always, and I live in Boston, right? So we're the problem. It's always been a group with a little bit of an edge to it. And I think that potential can do just absolutely amazing things. There are more women in space now. There are more, like, we're gaining on all the statistics except for the money. We just have to move a ton of money.
Yeah. So I guess it will be interesting to see what happens in the next couple of years. Hopefully there's an upward curve and we do see more wonderful. We do see more of the talent. We do see more of the talent from the underrepresented groups getting more of the checks. And and what really encourages me about that, if that does happen, and I've got my fingers crossed that it does, is that the opportunity for society, because we're going to get access to amazing technology. There's going to be wonderful niches that they tap into because we know the talent is there. They just need equal access, and I think that's something that has been long asked for. But I think what you and Adrian doing is fantastic. I have to ask. So when I check out you guys on LinkedIn, I always see this lovely puppy. So who's the puppy that I see?
Oh, he's here. I have one here. So that exit that you asked about, they had swag because they were going to a security conference. And I was like, you guys, no one's going to talk to you. You're like 3 men in suits. You look scary. So we had puppies made that said Good Dog Labs. And so now he filled up and he works at a VC and he's our senior associate. And so every founder that we give a check to gets VC Puppy. He's on Instagram as VC Puppy. And then every funder that writes us a check gets a VC Puppy. So if you see him at a conference or something like that, or Adrian always has him in his pocket, he's with us.
Amazing. So I now know what the connection is, because I see this sometimes when I look at your page on LinkedIn, or I see one of your posts. So now I know. Now everybody knows. And
Adrian says it's branding, but really my daughter looked at him and said, what's going to happen with the puppy now that we sold the company? And she had those big brown eyes. And so he said he works at a VC now. He's still here.
So he has equal voting rights.
Yeah, exactly.
Occasionally
He thinks he does anyway.
Exactly. And so clearly you guys are doing wonderful things in the States. I think I've asked you and Adrian before. Any plans to come to the UK or Europe at any time? Is that something that could happen?
I'm always down for a transatlantic flight. So we have one company that's between London and Austria out of Fund II, and 2 out of Toronto. We're starting some projects in Mexico right now, but we're Bostonian. London's the same. It's like same weather, same people.
So, nice
same
fit.
financial institutions. It's a second home.
Nice fit. Well, hopefully that will happen one day. And we'd love to meet yourself and Adrian at some point. But
we'd love that.
Love what you're doing. Love to have more conversations. Maybe with you and Adrian next time. That would be amazing. And
yeah,
I've got 2 questions. So one is, if people want to find more about Mendoza Ventures, where's the best place to find out more?
Our website's current. So it's mendoza-ventures.com. And then I'm on LinkedIn and my name is Senofer Mendoza. So I'm super easy to find. We just get a ton of LinkedIn. So let me know that you heard me on Paul's podcast and that you want to say hi, because we get a lot inbound and a lot of it just has, I think it's bots.
Yeah. Well, I'm sure. I think the challenge is that, you want to get a lot of engagement and you can't. There's only so many hours in a day. And I guess if it's not that relevant, then maybe it's probably not the best use of your time getting back to them, because it might not be that beneficial for them.
Exactly.
And
VC Puppy is on LinkedIn too, and Instagram. Yeah.
I need to connect. I don't think we're connections.
You should connect.
Maybe he declined.
I don't think
he may have declined. Who is this person? I don't see enough
sent him decks though, and we were like, "What do we do?" People have sent him decks. People have sent him pitch decks. So I responded. I said, "I'm a plush dog. You should send this to Adrian or Senofer."
So people are very creative. They think if maybe not by contacting yourself or Adrian, maybe the puppy, maybe he will consider a proposal. I think this is my last question. So the last question is a recurring question. So if you could invite 3 inspirational people for dinner, they could be alive or past, who might you invite?
Josephine Bonaparte, Abigail Adams, and Eliza Hamilton, because I feel like those women just need a dinner. Like no one bought them dinner with no expectation. And they've been through a lot. And I'd like it to be at the Ritz.
that would be.
Need a moment.
yeah, that would be. If I could make that happen, you have my word, I would. But yeah.
They'd all be horrified because I'd probably be wearing pants, but we'd get over it.
I'm sure the conversation would be sparkling. The food amazing. So if you're wearing pants, I'm sure that would be overridden by the amazing conversation. Very good.
Exactly.
Okay, Senofer, thank you so much for your time. Really loved meeting you previously. Love this conversation. Love what you're doing. Excited to hear and read about more of the exciting collaborations you're doing with your people that are in your fund. So thanks for your time today.
Thank you so much, Paul. This was a treat.
Thank you so much. Thank you so much. And thank you, everybody, for tuning into this episode of My Perfect Failure. If you're watching on YouTube, please do hit the subscribe button. It's a great way for us to grow the channel. And your feedback is most welcome. So keen to hear about the things you like and equally the things you don't like. So you can find me at paul@myperfectfailure.com, or you can find me via the feedback page on the website. So take care for now. Bye.
Thanks for listening to My Perfect Failure podcast. Be sure to visit www.myperfectfailure.com to join the conversation. Subscribe to our podcast on iTunes or Google Play. Look out for our next episode.